Welcome to GP Bullhound Tech Thoughts. Today is the 18th of June, and we're here with Inge Heydorn and Johan Roslund for our weekly market roundup. Today, they will be covering this week's tech market, including the reports from Roblox, Adobe, and Oracle. Over to them.
Let's start with the market. It's been a very positive market this week, even if you saw Fed now coming out and tightening earlier than expected, now stating 2023 instead of 2024. The market has still been strong, and especially on the tech side, it's like almost the market is breathing out and saying, okay, now the Fed starts to understand the market, we can take the next step. The biggest thing otherwise in the marketplace has been the gaming side. On Tuesday, MPD numbers came out, which were, I would say, really positive. 3% growth in software for May, on top of the 13% growth we saw in April. So this is much better than the guidance we've seen from the companies, which has been on aggregated level around single-digit negative. So I would say MPD numbers, which is US gaming sales, are positive. But at the same time, Roblox come out with quite negative numbers for April for them and May, which is taken slightly negative as the stock fell quite a lot. So that really dragged down the sentiment of the industry, which is, I would say, quite interesting because we're interpreting the numbers completely differently. We see Roblox more struggling the fact that they are quite time consuming, while the industry in software sales are really increasing better than expected for the second quarter. So an interesting week in terms of news flow and movements in gaming.
You said that Roblox, it's quite funny because they have a bit of a different business model compared to the other gaming companies there. So for Activision, for example, you often buy a game and then you have it. You also have the free to play, but Roblox is only dependent on people spending Robux in the game. And when less people are home from schools or work, they spend less money in the game there. So it's really interesting to see when kids are back from school after the summer to see if the spending in the game and the hours spent can keep up. So it's really top comps from September.
Remember, this is what we highlighted also in the IPO. We thought that will be tough because it's quite time consuming to play Roblox also. So we are worried about that, and that's why we didn't take a position given the valuation of the stock. And I think the big risk will be in September and when school starts again, as you said, Johan. So we're a little bit careful when it comes to being exposed to Roblox.
And another report this week was Oracle, and you had some really interesting takes there on how much money they really need to spend to keep up with Microsoft, Amazon, and Google on the cloud side.
Yeah, I think it's often missed when you look at the numbers from Microsoft and the big guys, Facebook and so on, how much money they spend on CapEx and OpEx to keep their businesses going. It is an enormously amount of money. And Oracle numbers came out now. The quarter was fine. A lot of the beat was on tax, but otherwise it was also a fine quarter. Guidance slightly light, but not much. But what the market really took on board were the new statements around the cash flow and the fact that they need to spend quite a lot of OPEX and CapEx to keep up with the big competitors. And I think that's one thing that often the market forgets, how much money the big guys are putting in to stay on top of the market.
So if you're Microsoft is spending a lot of money on your cloud, when you're that big in cloud, there's really doesn't matter, won't hurt your cash flow. But for Oracle, it's a lot of money. And then also on the database side, they have upcomers like Neo4j that we heard took money from Google this week, eating a bit of their market. So it's a bit problematic for Oracle long term, we would say.
Yeah, I also think if you look at Oracle, now I'm a little bit harsh, but let's stay harsh and say, what's the edge they have relative to Amazon, Google, and Microsoft? It is not that great. So it's going to be tough for them. And they need to spend to stay on top. There's no doubt about it.
A company with an edge, at least on the graphic design side, is Oracle, which reported yesterday. And it was a really good report. The growth was 23%. What was interesting for us, like in the digital signing space with DocuSign, is that their document cloud grew 30%. And remember that Adobe owns the PDF format. So having a signature solution baked into that product is, of course, a real growth driver. Any other comments on the Adobe reporting?
For me, I think it's just tagging along. That's the thing I love with Adobe also. It's almost never a surprise on the upside or downside. It just hums along, do the job, you good cash flow, good valuation. And then you find, as you said, Johan, snippets of new products coming out and showing quite interesting growth. So it's a company we really, really like.
And with that, I think we can round off the show.
Perfect. Thank you very much.